morning and welcome to Cycle on MNB World, your go-to source for the latest insights into the economic and financial landscape of Mongolia. I'm your host, Batsir Namshar, and we have a packed edition ahead, filled with crucial updates and analysis. In today's review, we'll be delving into the dynamic world of Mongolia's economy and business, exploring latest trends and outlooks. The Monetary Policy Committee of the Central Bank of Mongolia held an unscheduled meeting on May 13th. After evaluating the current economic conditions and financial market outlook, the committee decided to lower the policy rate by 1 percentage point, bringing it down to 11%.
In April 2024, annual inflation stood at 6.4% nationwide and 6.1% in Ulaanbaatar. The Mongol Bank's monetary policy measures in place since 2022 have effectively curbed and stabilized inflation. Declining inflation for imported goods and stabilized prices for key domestic food products have further contributed to this downward trend. Although there are risks of inflation due to wage and pension increases as well as fiscal activities, these impacts have been less significant than anticipated, prompting a downward adjustment in the near-term inflation forecast. Robust foreign demand and substantial export volumes have strengthened foreign currency inflows and improved the balance of payments. However, severe winter weather known as adzot has led to significant livestock losses, negatively impacting agriculture production and economic growth. In response, the Mongol Bank's committee reduced the policy rate by 1 percentage point to support stable economic growth and maintain both external and internal economic balance. Future policy decisions will depend on changes in both the external and internal economic environment and the inflation outlook.
Mongolia stands to significantly increase its air transport revenue by leveraging its strategic position in the $1.17 trillion global market. In 2023, Chinggishang International Airport welcomed 1.4 million passengers, with 18.4 thousand being transit passengers.
This year, the global tourism industry's revenue is projected to reach a historic high of $11.1 trillion. The seat occupancy rate in the global airline industry, valued at $1.17 trillion, returned to its pre-pandemic level only in October of last year. However, Airports Council International reported in 2022 that it will take several more years for transit passengers' numbers to return to their pre-pandemic levels. In 2019, 4.5 billion business and personal passengers passed through airports worldwide. According to estimates from Sabre Market Intelligence, only 1% of the passengers arriving at Chinggishang International Airport are transit passengers, compared to over 10% at major international airports. Of the 1.4 million passengers arriving in 2023, only 18.4 thousand were transit passengers. Mongolia's air transport market faces a seasonal decline in passenger numbers during winter. The Ministry of Road and Transport Development highlights the opportunity to offset this seasonality through increased transit traffic. Mongolia's geographic location makes it an ideal candidate to become an air transport hub, a potential recognized in policy documents. MIAT noted that 4.3 million people travel annually from Japan to Western Europe and 3.9 million travel from Germany to Asian countries. Additionally, China's international flight network has contracted by 43% due to geopolitical factors, making direct connections to 45 foreign cities no longer possible. By increasing the number of transit passengers, airlines could benefit from increased flight frequencies, lower fares for primary passengers, and fleet expansion. For airports, higher passenger numbers would boost flight and non-flight revenues. The tourism and hotel industries would also see improved revenues and reduced seasonality. Muhtemir, the executive director of MIAT Mongolian Airlines, emphasized, "If we develop transit transport and enter the foreign market, we will earn 2 trillion Mongolian tugriks." Last year, MIAT transported 14.6 thousand transit passengers, earning over 18 billion Mongolian tugriks, and plans to offer 85,000 transit seats in the future.
According to preliminary findings, Mongolia's gross industrial output in the first quarter of 2024 surged to 7.2 trillion MNT, marking an impressive 13.6% increase compared to the same period last year. This growth was primarily propelled by significant expansions in mining and quarrying, with mining production output increasing by 14.5% at 641.6 billion MNT, and manufacturing seeing an uptake of 9.9% at 125.4 billion MNT.
Gross output in mining and quarrying soared to 5.1 trillion Mongolian tugriks, driven by substantial increases in coal and lignite mining. Coal and lignite surged by 42.6%, with other mining commodities seeing an uptick of 80% from the previous year. Increases in the volume of lignite coal, hard coal, silver concentrate, iron ore, concentrated coal, zinc concentrate, fluorspar, and fluorspar concentrate produced was higher by 1.7% than in 2023 and reached 3.7%. However, copper concentrate, unrefined gold, and crude oil experienced declines ranging from 0.5 to 9.8% compared to last year. Meanwhile, in the manufacturing sector, steel, milk, cashmere products, coal briquettes, bottled water, soft drinks, juice, lime, cement, combed cashmere, and alcoholic beverages saw production increases ranging from 2 to 91.8%. However, there were declines in the production of flour, copper cathode, meat, and cigarettes ranging from 0.7% to 32.8% compared to 2023. Industrial product sales surged to 12.9 trillion Mongolian tugriks, reflecting 2 trillion Mongolian tugriks increase compared to the same period last year. The 18.1% increase was driven by 22% increase in mining and quarrying sales, coupled with 14.7% increase in electricity, thermal energy, and water supply sales. The uptick of 2 trillion Mongolian tugriks in mining and quarrying product sales was attributed to a 19.4% increase in coal and lignite sales, 30.8% increase for metal ores, and 13.5% increase in sales of other mining products. Foreign market sales of mining and quarrying products accounted for 9.8 trillion Mongolian tugriks. 57% of sales were coal and lignite, 39.3% for metal ores, 2.9% for crude oil, and 0.8% were for other mining activities.
Column Bank joined the company, has successfully issued $300 million in standalone 3-year senior unsecured notes in international capital markets. JP Morgan Securities plc and Deutsche Bank AG acted as joint global coordinators, while Korea Investment and Securities Asia Limited served as joint book runner.
This issuance marks the return of Mongolian commercial banks to the international debt capital market after a hiatus of over a decade. The notes were rated B3/B by Moody's and S&P, aligning with the sovereign rating of B3, B+. The bank's roadshow took place in Hong Kong, Singapore, London, and New York during the week of April 29, attracting a diverse range of investors, including hedge funds and global asset management firms. The issuance saw orders reaching $500 million. The $300 million 3-year senior bond was successfully issued with a coupon of 11% in the Reg S 144A format. The notes were allocated to hedge funds and real money investors across the USA, Asia, Europe, and Mongolia. Deputy CEO of the Column Bank added that Column Bank became the first Mongolian commercial bank to tap the dollar bond market on a standalone basis in the last 12 years. The CEO of Column Bank, Norihiko Kato, noted this successful transaction is a significant milestone for the Mongolian banking sector, setting a benchmark for future issuers in the global capital market and potentially increasing foreign exchange reserves in Mongolia.
We appreciate you joining us today for an in-depth look into Mongolia's economic landscape. Stay informed, stay engaged, and remember to tune in for our next insightful exploration. Thank you for being with us. Until next time, goodbye and have a great day.